Welcome to Petros Family Wealth. Today we're going to talk about what are the points at which somebody would consider filing as an S Corp. I was just talking to one of our clients here a couple weeks ago, small business owner, contractor, 1099 employee, and kept hearing about S Corps and wanted to understand if it makes sense for him and his financial plan. And so we just went through a couple hypotheticals and identify whether it made sense or not. And then we try to take the steps here to go ahead and incorporate. What I'm going to do is I'm going to go through that same path, that same thought process with you in order to help you understand. So let's go ahead and dive in. I want to just start off saying Petros Family Wealth does not provide tax preparation at this time. So after you take a look at some of these ideas, go ahead and connect with your tax advisor to make sure that it's the right fit for you and your family. But I want to talk through first the conditions for filing as an S Corp. Number one, you have to be a 1099 employee or own your own business. That's by far the first two requirements there. The other two requirements are, one, generally helps to have a more stable cash flow. Meaning that if you're just starting out and you're unsure as far as whether it's going to be successful or not, or you're unsure, or maybe a lot of your income is very seasonal, having a stable cash flow is very important, because a key part of filing as S Corp is to take on a regular salary. And if your cash flows are struggling or all bunched up in a given year, need to have some cash available during those dry periods. And then the next requirement is that you have to make sure that the tax savings is more than the additional costs of filing as an S Corp. Kind of makes sense, right? What's your rate of return of going through the hassle of filing as an S Corp? So what I'm going to do is I'm going to show you some numbers and some examples here. We're going to talk through it, and then you can hopefully, the numbers should be easy enough here where you can start to apply those to your numbers and get a sense of where you're at and where you might have some opportunities. So what I have here is a basic breakdown of a small business, and you're a sole proprietor, and total expenses, let's say $50,000, and total revenue of $150,000. So your profits are $100,000. And if you keep chugging along, doing what you're doing, on those profits, you're going to have what are called payroll taxes, sometimes called FICA. And basically, it's the Social Security taxes and Medicare taxes on those wages. And you pay them both as the employee as well as the employer on those profits. And this is even before you start to hit your regular income tax discussion here. And so the benefit of an S Corp is that you pay yourself a reasonable wage, and you're reducing these FICA or these employer self-employment taxes to just the reasonable wage that you're bringing yourself down to. So as a hypothetical, same revenue, same expenses, $100,000 of profit. Let's say a reasonable wage is $40,000. Well, now, instead of paying this, just over 15% on all the profits of the $100,000, you are just paying those taxes on the $40,000. And the rest of it, the 60, is an owner distribution or profit distribution from the company. If we run the numbers there, you're paying as the client, as the individual, the employee, paying your Medicare and Social Security taxes, and you as the employer are paying Social Security and Medicare taxes on the $40,000. The difference on just that self-employment tax is a total of $9,000 on this example. Feel free to kind of maybe take some of those numbers and try to apply towards your situation. But in this hypothetical, it gives you an opportunity where might be some sizable, almost 10% savings on the overall profit in this hypothetical. So it might be worth taking a look at. So what are the additional costs? Number one is you need additional tax preparation. So you're going to be filing taxes as an S Corp, and then you're also filing taxes as an individual. So a lot of times you actually start to see potentially a doubling of your tax preparation costs. So if somebody charges you $1,000, you might start to get into that $2,000 range. And so that additional 1,000 eats that 9,000 savings down to 8. The other thing you generally will need is a payroll provider. Like I said earlier, one of the key things is that you're going to be paying yourself a salary, a wage, and so you generally either have an accountant pay yourself work to do the payroll taxes and everything, or you have to sign up for something like a Gusto, QuickBooks, Payroll, ADP, Paychecks. There's a whole lot of them out there, and some of them you can set it up on automatic. So it's the same salary every 2 weeks or so, and that might be fruitful here for your business. But again, that's going to start eating into that $9,000 of potential savings. So some of the lesser known costs or downsides of filing as a S Corp is that your wages that you're paying Social Security on is lower. Therefore, your potential future Social Security benefit will also likely be lower as well. That can be a pretty big bet, especially for younger folks. They may feel confident that Social Security is not going to be around, but if it is, and we took a lot of these tax savings and it lowered our future Social Security benefits, well, that's something to consider. The other thing is if you have depending on what type of retirement plan that you have, it could be a SEP IRA, 401k, simple IRA, or just regular traditional or Roth IRA. There's lots of different types. This might actually also lower the amount that you can contribute to your retirement plan. So there's a lot of factors there to consider, but as you can see in some of these examples here, it might be worth investigating. Some of the things we're not going to discuss here is the possibility of paying state income taxes through your S Corp or qualified business income, or a lot of localities and states also have taxes on wages that might be lowered compared to if you're filing as an S Corp. So definitely, again, chat with your tax advisor to learn more. But as far as resources, so one of the key terms is called reasonable wage. You have to pay yourself a reasonable wage. So you can't pay yourself $1, for example. It's generally not reasonable. One of the resources that many CPAs have referred me to would be the Department of Labor's wage data survey. And you can see I have a link here on our Excel sheet. Feel free to take a look at your locality, your profession, and maybe identify what type of wage or income that you might pay yourself that would be similar to others. Another thing to consider here, if you do file as an S Corp, there is a very specific timing issue, and you have to do it by the beginning of the year, essentially. Specifically, it's the 15th day of the third month following the end of the year. So for most people, March 15th. And so you have to file those certain forms and get it all done here at the beginning of the year. So if you're here towards the end of 2024 and you're thinking about this incorporating for 2025, make sure you get all your ducks in a row and fine tune those numbers so you can go ahead and implement right away. But if you're in the middle of the calendar year exploring this, we're out of luck for this calendar year. Gotta wait till next. Hope you found that helpful in both deciding or figuring out if it makes sense for you, some of the potential tax savings and some of the conditions that you might have. And feel free to reach out to us or your tax advisor to maybe simulate and talk through some other potential impacts that might be good or bad for your situation. So thanks again for some time. If you enjoyed, please go ahead and like, subscribe, and hit that notification button. Thank you so much.